Vinati Organics has risen as much as 3% in trade today after reporting a steady set of numbers for the March-ended quarter. What are the key factors at play and what does the road ahead for the company look like? Let's ask the management. Joining us now is the Executive Director, Vinati Saraf Mutreja. Thank you for joining us, Vinati, and a very good morning to you. 11% sort of a revenue growth and 3.5% sort of a profit growth for FY18. What kind of growth can we expect from FY19?
See, in FY18, actually the first 9 months, the volumes, the offtake was a bit low. Now Q4 is when the ATBS demand has increased on account of two things. One, our largest competitor exiting the business, and secondly, oil prices going high. The demand, the overall application of ATBS in oil exploration has increased. So if you look at Q4 numbers, which is over 200 crores in revenue and 50 crores in PAT, now that's the run rate we expect to maintain in the coming quarters also, which basically translates into a 25 to 30% revenue growth in FY19 and 30 to 35% net profit growth.
All right, Vinati, so let me get an understanding of how your margins are currently panning out before we start talking about the outlook. To what extent has there been an exposure when it comes to crude, because that remains a sticking factor for a lot of your peers? How is crude working out for you? Should it go to levels of around $80–85 a barrel? What sort of impact does it have on your company and its margins? And otherwise, if it does come down to the levels of around $60 a barrel, how does that work out?
See, our raw materials we are buying from refineries, so they do depend. The raw material prices for us does depend on crude prices. If crude increases, the raw material price increases, but we have formula-based pricing with our customers, so we are able to pass on this increase in price to our customers. But what happens as per the formula is our margins are fixed in terms of dollar per kg. So as a percentage, EBITDA percentage of as a percentage of price or percentage of volumes does come down. But what is the benefit? But overall, crude going up has a benefit for us, because as crude prices increase, the demand or the application for ATBS in oil and gas sector increases, and that is the reason why you will see a strong growth in ATBS volumes in Q4. Why we are debottlenecking the capacity from 26,000 to 30,000 tons in this quarter itself, because the demand for ATBS is very strong. So and a lot of it is on account of crude going up, and which also gives us some pricing power as far as our spot customers go. So as net our EBITDA margins actually don't suffer because of crude going up. It's overall it's beneficial for the company.
Right. You were just talking about how volumes in the fourth quarter for ATBS have actually gone up, and I also believe that your largest competitor exited this segment of business from December last year. So if you could tell us what your market share in ATBS is right now. Previously, I remember you speaking, elsewhere, and you said it was about 65% or so 2 or 3 months back.
I memean, in the beginning of FY18, it was we were doing 40–45% of market share. Today, we are at 60–65% of market share as far as ATBS goes.
All right, Vinati, in that case, we'd also like to know about all the investments that you had earmarked in FY18. To what extent have you deployed these investments? What are the investments that you plan to deploy in FY19? And how does that work out eventually when it comes to the top line in terms of the next few financial years?
See, our investment mainly planned for FY19 is for the butyl phenols project, which is a derivative of isobutylene. The total investment for that project is about 240 crores, of which we have invested some 50 crores this year. The bulk of the investment is going to happen in FY19, and the plant is expected to be on stream by April 2019.
What about the volume offtake in IBB? Has that picked up?
See, the volume offtake in IBB actually in the first half of this year was quite low because one of the largest manufacturers had undergone a prolonged shutdown. But now that they have increased their ibuprofen capacity, their offtake for IBB is also increased. So FY19 we expect about 30% volume growth in IBB as well.
All right, Aditi, you did say that we could expect a revenue growth of somewhere, in the range of about 30% or so for FY19. But say by FY20, FY21, that is over a 2-3 year period. What kind of revenues can one expect? I believe you were looking to double your revenues over a 3-year period.
Yeah, so we did about 770 crores this year. After 3 years, we are expecting to touch 1500 crores. Volumes of ATBS are increasing, IBB is increasing, butyl phenols itself will add about 350 to 400 crores in revenues.
So Vinati, just to get this straight, can we assume that you are looking to get revenues worth 1500 crores in the next 3 years? What sort of expectations can we have in the bottom line too in that case?
Well, for FY19, you can expect 35% growth in bottom line. From FY19 to FY20 to FY21, I think a steady run rate of about 20-25% is a fair assumption, growth in the bottom line.
Board has approved the expansion of ATBS capacity from 26 TPA to 26,000 to 30,000 TPA. What would be the additional investment for this incremental expansion?
It would be about 35 to 40 crores.